Nvidia, ahead of their earnings, they got a bunch of price target increases this morning. The street extremely bullish as we come into their report next week. How about you?
Yeah, normally I kind of reject, agreeing with the analysts, but this is one of those situations where I agree. I mean, you look at, again, just, everyone's talking like whatever Nvidia can produce, we want to buy it. I mean, Microsoft is talking about the fact that they got, I don't even know, thousands or millions of things. They just need to hook them up and get power to them, which is a different story. But again, really an unchanged thesis here from previous appearances on the big three. And I'm really, the biggest reason I brought this stock is, again, a lot of people have watched this go up for literally years, maybe decades. And I think the shakiness of this week can provide some buying opportunities that people that maybe didn't join that trend and are looking to join the next leg higher.
All right, Rick, so as we look at the technicals, does it look like it's time for someone to jump in late to the party if they miss the Nvidia train right now?
That's the hard part, is bull markets won't let you in, bear markets won't let you out. Like if we did have this pullback here, I thought it was interesting that we did not test our relative lows. You can see 177, we hit a double bottom here, but we gradually made slightly higher lows every time here. So I thought that was noteworthy, that even though we did break below this trend line here in blue, we did not make any kind of significant new low points here so far based on these relative extremes near 177. Our highs came in here just above 212 here. That gives us this downward sloping white short-term trend line to keep in mind here. So on the verge of potentially breaking through that area of possible resistance if we were to move higher. Around 195, 196 is noteworthy to me because that's where we had an old high point here, a bit of a chop and consolidation around that area once again. When we look at our other studies, RSI, our measure of momentum, is recovering somewhat, but if we were to see a price breakout, RSI would likely also push above the trend line and above the 50 midline, which would be more of a, once again, a confirmatory signal for the bulls there that would add extra credence to the possibility of a stronger breakout taking hold. We are between our two moving averages that we mentioned earlier, 63 and 21-day EMAs coming in around 184 and 192 respectively. So those are some short-term areas to consider as well. Finally, when we look at volume profile, the heavy trading area is right about where we bounced. It lines up with our low points that I was mentioning. Around 175 to 185 is really a key area to hold based on this idea of this being an important trading range based on the volume. So if we were to dip below that, I mean, 165, these lows here would be the next possible point that stands out. If we move higher, we can see that our +1 standard deviation channel almost exactly in line with those old highs. That comes in just shy of 213 to the upside.
And as we look at Nvidia, and some of this recent pullback we're seeing and how it's affected their market cap, we had this $5 trillion conversation. They're now down below $4.6 trillion. That's how much this pullback has cost them, and some of that chatter around this Michael Burry put in some other headlines. But
3 things to look out for during Nvidia's report on November 19th are as follows. 1. How Nvidia might be unique. Jensen Huang, the CEO of Nvidia, recently gave investors hints regarding the demand for the company's newest AI chip architecture, Blackwell, and the upgrade, Rubin, which will be released the following year. According to him, the entire exports of networking equipment and Blackwell and Rubin goods so far in 2025 and 2026 amount to almost $500 billion. The fact that rival Advanced Micro Devices recently revealed a plan to spearhead the next generation of AI computing and recorded record quarterly sales lends credence to the notion that demand for Nvidia's top graphics processing units, GPUs, is still high. As the AI story develops, it will be crucial to look for hints about how Nvidia can differentiate itself from these competitors, and this is probably related to the concept of innovation. Sales profitability. For the majority of the most recent quarters, Nvidia has kept its gross margin above 70%, and it intends to keep doing so. That demonstrates strong sales profitability and is essential to the business's continued growth. Unless it runs into obstacles, the company should benefit from the scaling up of Blackwell, which was introduced in the fourth quarter of last year, by streamlining operations and bolstering gross margin strength. Progress in this area would be encouraging for Nvidia's next product launches, which is crucial given the company's goal of releasing new goods every year. 3. Remarks about China. Due to U.S. export limitations, Nvidia has not been able to enter the Chinese market, and China has recently supported the use of chips made domestically. According to CNBC, Huang has been trying to entice Nvidia to return to China, a market that might be worth a few $100 billion by the end of the decade. Although I don't think Huang will reveal a solution to this issue during the earnings report, it would be interesting to keep an eye out for any hints about his approach or possible discussions with the Trump administration. The enormous development potential in China has the potential to significantly boost Nvidia's earnings in the years to come. According to Nvidia management, by 2030, data center capital expenditures could amount to between $3 trillion and $4 trillion. Despite its strong growth, Nvidia's stock is priced similarly to other large tech stocks. According to the data, there hasn't been a negative moment in the last few years to purchase Nvidia stock. You're up more than 1,180% if you bought in 2023, when the artificial intelligence, AI, arms war began. The stock's strength is demonstrated by the fact that even if you purchased it at its most recent top, early November, you would only lose roughly 10% of your investment. Typically, when investors notice a stock circling its all-time high, they become a little alarmed and believe it to be expensive. Investors shouldn't view it that way, though. You're probably investing in companies that don't often offer discounts if you're trying to acquire the top ones. Finding stocks trading close to all-time highs isn't always a bad thing if the company is doing well. It indicates that people are aware of this. Even though Nvidia is already close to its peak, I believe it may be ready to soar after it releases its fiscal 2026 third quarter earnings for the quarter that ended on October 31st, on November 19th. If I'm correct, investors should think about purchasing shares right away because Nvidia still has a lot of space to grow. Nvidia has profited more than most from the AI arms race. Its top-notch graphics processing units, GPUs, and top-notch supporting infrastructure are the reasons it performs so effectively. Additionally, many of the hyperscalers, cloud computing experts who run data centers, in need of GPUs built workloads around the Nvidia ecosystem because Nvidia had a first-mover advantage in 2023 when the AI arms race started. This locked them and their clients into using Nvidia's products for the foreseeable future. Although this doesn't stop customers from moving to a different provider, selecting a different computing supplier requires a lot more work and may result in more expenses. The fourth year of the AI arms race is quickly approaching, but it is far from ended. AI hyperscalers reported hundreds of billions of dollars in capital expenditures in 2025, setting a new record, and increased that amount further in 2026. During its Q2 conference call, Nvidia CEO Jensen Huang informed investors that the company expects global data center capital expenditures to exceed $600 billion in 2025 and increase to $3 trillion to $4 trillion by 2030. This supports what Huang said. If he is correct, Nvidia's stock still has a ton of room to expand. Nvidia receives around 1/3 of all AI capital expenditures, given that Wall Street analysts project the company will make $207 billion by the end of January 2026. Nvidia may make $1 trillion if the market really expands to a $3 trillion opportunity by 2030. Although that is undoubtedly an optimistic estimate, it would represent an amazing return for stockholders. Nvidia CEO Jensen Huang and his colleagues know more about future demand than the typical investor, so even if the ultimate dollar amount is off, I believe we can trust the basic trajectory of the AI computer build-out. Consequently, Nvidia appears poised to soar as it approaches Q3 earnings. Historically, Nvidia has exceeded analyst estimates, and I don't think that will change this quarter. To what extent will Nvidia surpass expectations is the question. Since Nvidia doesn't carry a high stock price into Q3 earnings, a huge beat fueled by sales of its high-end chips could cause the stock to spike. The stock is trading at less than 30 times the earnings for the following year, which is about equivalent to the prices of the world's second and third largest corporations. Given that Nvidia is expanding at a somewhat quicker rate than these three, its stock appears to be reasonably priced. It also suggests that if Nvidia suggests that its FY 2027 earnings could profit from the size of the AI business, its stock may be ready to soar after earnings. Nvidia has done a fantastic job at navigating at fast speeds and is currently leading the AI arms race. Nvidia is a fantastic stock to purchase now and own for a long time, in my opinion, because this trend will continue. Investors in Nvidia are facing a significant moment. Next week, we'll see the release of the artificial intelligence AI chip giant's third-quarter earnings report. Naturally, these reports are released every 3 months, so you might be wondering why this one in particular seems to be so exciting. Since AI equities have surged quarter after quarter, driving up valuations, there has been growing concern in recent weeks about the potential emergence of an AI bubble. Some are now concerned about the sustainability of these levels. Other tech firms have provided encouraging proof that the AI revolution is continuing, but will Nvidia, the leading chip manufacturer, follow suit? Investors should begin considering the major trends in investing as 2026 draws near. Though it began in 2023, I believe that nothing has changed in the last 3 years, and that investing in artificial intelligence, AI, will continue to be the main topic. The truth is that the AI build-out is far from finished, and in 2026, AI hyperscalers want to break the records they set in 2025 by investing hundreds of billions of dollars in AI computer infrastructure. These large capital expenditures benefit many businesses, but only one is certain to succeed. It may surprise you a little, but that company is my #1 AI stock selection for 2026. Nvidia is without a doubt the business that is profiting the most from the AI boom. Since the AI megatrend began in 2023, Nvidia has been among the best-performing companies on the market, propelling the business to the top of the global market capitalization rankings. Although it's obvious that competition is growing, I believe Nvidia will maintain its lead. By working with OpenAI to enhance its software, AMD is raising the ante. Broadcom keeps announcing collaborations with AI hyperscalers to create their own proprietary AI processors that can perform better than GPUs at a lower cost. Even though Nvidia continues to lead this field, competition is becoming more fierce. Although it is hard to predict which firm will do the best over the coming years, Taiwan Semiconductor offers a means to invest in all three without having to worry about which one will win out in the end. The majority of the high-end chips used in devices from all three of these providers come from Taiwan Semiconductor's TSMC plants, which are the top chip foundry in the world. Taiwan Semiconductor has achieved this success by consistently introducing innovative technologies and producing them with remarkable yields. Taiwan Semiconductor is introducing new technologies, such as their new 2nm chip node. Compared to the preceding 3nm generation, this delivers significant advancements. The 7nm device uses 25% to 30% less power when set up to operate at the same speed. That's significant because energy consumption is currently a major priority of the AI build-out. Taiwan Semiconductor will be able to charge a significant premium for these chips, which AI hyperscalers will be delighted to pay, if businesses can use a lot less electricity and still maintain their processing power ambitions. It might take a few quarters until AMD, Nvidia, or Broadcom release technology with 2nm chips because such chips are currently going into production, but the advantages are genuine and will materialize soon. TSMC is performing exceptionally well and has growth rates that are comparable to the best in the AI revolution, even in the absence of this cutting-edge chip node. TSMC's revenue increased 41% year-over-year in the third quarter. That outpaces the growth rates of AMD and Broadcom, and it only lags behind Nvidia's most recent quarter, in which it increased at a rate of 56%. Despite plans for huge expansion that involve the construction of many facilities in the United States and other countries, Taiwan Semiconductor is also making more money from its operations. Taiwan Semiconductor is significantly less expensive than any of the three computing units it supplies chips to, even with all of these amazing aspects. I believe Taiwan Semiconductor is a no-brainer purchase to benefit from the AI build-out because it is expanding more quickly than the majority of its competitors and is priced significantly lower. Taiwan Semiconductor should receive the same premium as the computing providers because it is a key player in the AI arms race. I believe it's a great company to purchase now and should perform well in 2026 because it isn't valued at the same premium as its peers. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
Hi there. So always busy. Nvidia traded about 3.5 million contracts today. That is above average. The busiest contract not expiring today were the November 200 strike calls. We saw almost 100,000 of those trading for over $3 a contract. Buyers of those obviously making bullish bets. And the options market is implying a move of about 6.4%, which is in line with the 8-quarter average of about 6%. We actually acquired some Nvidia and put on a buy right in this thing yesterday, and I think that's probably a good way to play this going into the print. So you would be buying the stock. In our case, we were selling some short-dated calls, but I think some others could look to sell some longer-dated options, maybe the January 215 calls, which you could get just under $5 for those, get a nice standstill yield, and still have some material upside participation. And those calls you're selling are above those recent highs.